There has been some recovery from the lower levels, though. The Hang Seng is trading with gains of around 0.4%.
Because the other indicators were anti-emerging markets or not clement to, EMs.
We've got a lot of tier one offerings, soft products in the enterprise application space around the banking book.
Adani Enterprises about 1% higher. There is BEL, NTPC, Coal India. Some of the PSUs are starting positive.
To do auctions quickly, never. I think by doing an auction, we are doing an injustice to the customer.
I am positive. Of course, the degree of positivity in terms of how much returns you can make will be obviously less than what we made in the last 2-3 years.
It's about 80 points higher on the Nifty. The day's high today was 83,867.
Tata Capital has initiated work on a big bang IPO.
People are expecting the first support level for the rupee at 85.2.
There will also be discussions on how to deliver measures in the budget which can support growth, consumption, and encourage the private investment cycle.
The IT and the auto stocks are the ones that's actually keeping markets quite subdued.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good afternoon. Welcome to Closing Bell. It's the last hour on Christmas Eve, shall we say. And the market's changed its color. It's not been able to hold on to, too much of gain today. It's been more red than green. But let's see. We have the last 1 hour. So let's see if Santa manages to reappear again.
But it's not a big cut, right? It almost feels like there's some fatigue, like let's get the market done with. But, I think one thing that stands out is this 200-day moving average, which is approximately around 23,840, 60, 70 thereabout. It was the high yesterday, and even today, the intraday high on the Nifty is 23,867. So the 200-day moving average, today's high and yesterday's intraday high is all coinciding, and markets seem to be facing resistance at this level. So from that level, we've seen a fall of about 140 points from the day's high. But again, if you just look at the index level, it's pretty much flat.
Absolutely. For what it's worth, just to go over the movers and shakers today, the Tata Group obviously takes, top billing because of that news break that Money Control put out. The likely IPO of Tata Capital in 2025 could be a big issue, 15,000 crores. And because of that, several Tata Group counters, Tata Motors, Tata Chemicals, investments, a lot of these stocks have been up and about. So, we have all of them coming up for you. So, fair amount of green on the Tata Group today. Aside of that, there are some other consumer names that have managed to come back. Britannia would be one. There would be something like an ITC, that's case in point. Nestle is managing some green. Trent is managing some green. Asian Paints also 0.3, 0.4% higher. So on consumer, there is some buying that's taking shape. What's seeing profit taking today is one is, of course, metals. Remember, yesterday was all about the steel up trade. Well, it lasted for 1 day. Now it's down. JSW, Tata Steel are all losing ground. And banks have been fairly lackluster today. So large banks like SBI, they're not really contributing to the upside, so to speak. And IT is also ambling along. IT is not a major mover on the way up. IT is actually seeing some pressure. So those are the broad trends. IT banks down, consumers seeing some buying, and the Tata Group getting a lot of the headlines today. That's on the large cap screen. But I think mid caps, Rima, there are more exciting stocks, more deals, more order wins that are keeping stocks still excited today.
And the advanced decline ratio is slightly in favor of the gaining side. Remember yesterday, despite the index showing you a gain of about 0.6, 0.7%, the advanced decline ratio was negative. Well, today, the gap between the two is narrowing, but so far at least, there is a little bit of a lead that the advancing stocks hold. MobiKwik is your big winner on large volumes, 14% up on that. Greaves Cotton on the potential IPO of its EV subsidiary. Greaves Cotton has taken off, 10% up. Sagility, JP Morgan puts the target price at about 55 rupees. That's higher. Gas stocks across the board. In the frontline pack, it's BPCL. But outside of that, GAIL, IGL, big moves seen. Paytm is up nearly 2%. Year-to-date, Paytm has a gain of about 55%. Ola Electric is another mover on the way up. RBL Bank deserves mention. again in the green for RBL Bank. On the way down, HCC is under pressure, second day in a row. In 2 days, HCC is down nearly about 10%. Swiggy has had a fantastic run, so a little bit of profit taking visible on Swiggy, 3.5% lower. Vedanta, SAIL in the metals pack are trending with mild cuts, 2.5%, giving it companies NMDC and Nalco also down 1.5%. But on the whole, it's quiet, but with a negative bias. And this is at odds with what we've seen across the rest of the global markets, where the color has been green. It's been thinly traded, it's been quiet, but it was green across the Asian market screen, and even the early rates in Europe right now, the CAC and the FTSE currently higher. So how should you position yourself in the last hour of trade? Mitesh is now with us with a few closing strategies. Mitesh.
So, early in the day, I was talking about that we'll possibly do a range, and, we got a high of around 23,850, 867, which is slightly higher than 23,850, but it didn't sustain over there. Came back. So I think we might go back to 23,600, and in a bad case scenario, even 23,500. So this texture, isn't actually turning on the upside, but I still believe sell and rallies could be a good way, though next couple of days could be spent in consolidation as we approach the F&O expiry. So on the index, deploy range strategies, try to sell near 23,800, 820 levels with a 50-60 point kind of a stop. Try to buy near 23,550, 600 zone with another 50-60 point stop till, we get a directional bias coming into play. So I think that's the way to approach the index.
Okay. What about individual stocks? What trades today, Mitesh?
Good afternoon, Ruby. I have a sell on Maruti with a stop at about 10,820. 850. And a target of around 10,400 to begin with. And another sell on MCX, which I would recommend selling with a stop at 64.50 for targets of 60.50.
Got that. Let's get to the big story of the day, and this is a CNBC-TV18 exclusive. Sources are telling CNBC-TV18 that Amber Enterprises may be looking to demerge its business. Sudarshan is here with the details. Sudarshan.
So Amber Enterprises has three business divisions: consumer durables, electronics and railway subsystems. Now we understand from sources that company is looking to demerge its electronics division, and post the demerger, company may bring an IPO, and for the same, company is likely to have already appointed the bankers. Now talking about the revenue front for the electronics division in FY24, electronics division had formed 20% of total company's revenue. But talking about Q2 FY25, in Q2 FY25, electronics division revenue had formed 30% of total revenue and had almost doubled if you compare with Q2 FY24. On the valuation front, Amber Enterprises is trading at FY26 estimated P 54 times. Now compare peer to peer with Dixon. Dixon is trading at 99 times. Now on the stock returns in 2024, Amber stock has given positive returns of more than 100%, while for Dixon, returns have been more than 200%. So on the IPO front, company is looking to bring an IPO for electronics division, and that's the reason for the last 2 days, stock is sharply higher. CNBC-TV18 has reached out to management for the query, but comments are still awaited.
Okay, all right, Sudarshan, thanks very much. Yeah, explains this 20% move on Amber in a week where there are not too many queues and it's largely thin trading. This is 6% today and was almost a 13% move yesterday. So we're talking 20% in 2 days flat. That's Amber Enterprises, around 7,300 on the screen. Well, Deepan Mehta is joining us on the show this afternoon. Deepan, always a pleasure to have you on. Season's greetings, and hope you're getting ready for a nice midweek Christmas break. Let's start with some of these EMS companies. What a tremendous year they've had, right? And this new piece of news, this potential demerger of one of their businesses, this is giving a fresh lease of life to Amber. Do you like this stock, or would you rather go with something like a PG Electroplast or a Dixon? Or do you feel the run-up has already happened now? It's too late.
Yeah, Subhi, good afternoon, and thank you for having me on your show. Yeah, I think the valuations are crazy for these companies. I think like Dixon going at 100 times and 60, 70 times for Amber trailing 12 months. But as a disclosure, we own shares of both these companies and cannot believe the valuation which they are trading at. No doubt there is growth, but I think we are paying far too much for these growth numbers. And, there are very few pockets of where the growth is still in that mid-teens or 25, 30%. And investors are flocking to those counters like, say, Dixon or Amber or some of the electronic manufacturing companies like, say, Keynes or Sirma SGS, or there is that Cient as well. So I mean, if you're holding these shares, it's great. You remain invested. But from a fresh investment perspective, I think wait for a deeper correction.
Then you're definitely having a party, Deepan. Since you've been holding both Amber and Dixon in the portfolio, then it's going to be a very happy new year and a big new year bash, right?
Yeah, absolutely. It's going to be a New Year bash, but sometimes you also can't believe the gains that you have got in a stock, and that fear is there that look, these stocks are trading at very expensive valuations, and we must brace ourselves for a correction. These kind of valuations are just not sustainable unless we have got the earnings trajectory completely wrong, and the company grows much, much faster than what the street is projecting.
All of them have done so well, Dipan. So PG Electroplast, we've been highlighting it since morning, 300% up for the year. Keynes Tech is up 176%. So it's been big gains for the entire basket. But let's get to another big stock and another big mover, and that's Greaves Cotton. This is after the electric mobility arm of the company has filed for a 1,000 crore IPO. The DRHP is out. Sudarshan joins in with more.
So Greaves Cotton stock is in focus. Stock is up, I think, more than up 8%. And it's because of that, its electric mobility arm has filed draft red herring prospectus for an IPO. So IPO will be a mix of both fresh issue and the OFS. So via fresh issue, companies looking to raise up to rupees 1,000 crore, and via OFS, both major shareholders, that is Greaves Cotton, and second major shareholder is Abdul Latif Jameel Green Mobility, will be selling shares via OFS. So company will sell 5.1 crore shares, and Abdul Latif Jameel Green will be selling 13.8 crore shares. Talking about the major shareholders, Greaves Cotton holds currently 62.5% stake in green mobility, electric mobility arm, and Abdul Latif holds 37.5%. Now talk about what exactly company will be using via IPO proceeds. First, it will be investing in product research. Second, it will develop and build battery assembly capabilities, and also will be investing to boost manufacturing capacity. So that's what company is going to use the IPO money of electric mobility arm. So now we'll be awaiting SEBI's approval and what exactly at the valuation that company is looking to raise money via IPO.
Thank you. I don't know if it's had a rub-off impact on Ola Electric, but that too is higher in trade. Dipan, have you looked at the Ampere e-scooters? Your thoughts on the products and the EV business of Greaves Cotton?
Yeah, well, frankly, I'm disappointed. One would have expected Greaves Cotton, the EV business, to remain within the company, but doing an IPO means that Greaves Cotton will get a holding company discount, which could be anything. And the other remaining business of Greaves Cotton is not that exciting. It's a kind of a mature business. And the real growth and the valuation in Greaves Cotton was coming through the EV business. A few months ago, I think a few quarters ago, they had got into some issue in terms of the FAME subsidy, but now that seems to have got resolved. In any case, the present EV subsidy and the products are I think in market share terms, they're number 4, number 5. So I don't think you can value them at the same level as say Ola Electric or what value you may ascribe to any of the existing auto players. So I would just be a bit careful when it comes to Greaves Cotton at this point of time. I'm not sure that these kind of returns or this kind of up move can be sustained. There are much better plays within the auto industry than maybe a Greaves Cotton. As I said, this holding company thing is a big question mark, according to me.
Okay, so Greaves Cotton, let's see how this plays out in terms of the eventual IPO of the EV arm. Just back to the screen, looking at some more movers and shakers. Not much has changed. I mean, it's the Bank Nifty that's been under the weather today. We've been pointing that out. So, Deepan, in fact, let me ask you this. Largely speaking, when you talk to most fund managers, most point out that financials, they've underperformed this year. So this is a place to go to, perhaps, when you're talking about a medium-term portfolio outlook. Would you agree with that? And give us 1 or 2 stock picks in financials for 2025.
Yeah, I would tend to agree with that the BankX has been a big underperformer. Banks per se have not done well because the pre-provisioning profits for entire calendar year has been pretty much flat. And even all the unsecured lending which they have done, the NPAs have kind of creeped up over there as well. But these stocks are cheap, no doubt about that. And certainly you want to buy stocks which are out of favor. So if you have a slightly contrarian strategy in play, then banks can do well, especially now with the GDP growth rate coming off. If an interest rate cut comes, then that could certainly be a big boost for the banks, and any improvement in liquidity also could be a trigger. Having said that, I think I would go with the tier 2 PSU banks. I mean, I can't believe I'm saying this thing after so many years getting positive on these companies. But look, they've narrowed the gap when it comes to their financial performance. They've narrowed the gap when it comes to customer servicing. They have a strong franchise in terms of CASA. So I would go with these companies, the likes of Union Bank, Central Bank, Punjab and Sindh, Bank of Maharashtra. I think there are about 7-8 such banks which are still trading at very attractive multiples. And there's scope for re-rating over there and earnings also to get a boost if the trends improve within the industry.
You know, Dipan, you've been so cautious in the markets of late that I've never heard you, go out there and recommend any stock or any sector. It's after a while that, you're talking about going out there and buying. Most of the times you're amazed, expressing awe at the valuations of the stocks that even you hold or otherwise in the market. But let's get to Interglobe Aviation, because that's up nearly 5% over the last 2 days. We got the air traffic data, and plus yesterday there was an upgrade on the stock. Vinny is here with us.
Okay, let's move on and talking about this aviation space. The India's domestic air passenger growth that has jumped by 12% YOY in the month of November versus October of 8%. The first half of the year also they managed to see a growth of around 5%, and Indigo's 15% growth in the month of November is that something that is keeping the stock abuzz. Now, other than that, when you're looking at it, the occupancy in Indigo also has climbed to around 90% in the month of November, which is the second best November in 5 years for the company. And as of now, till date in the month of December, the highlight coming in is that the occupancy is around the 90% mark in the month of December as well. So good traction is what they're seeing, especially holiday season is something that is coming and is something that could be aiding the growth of airlines as well. Now, Indigo's market share in terms of that has remained above the 60% mark as well in the month of November. 63.6% is what the data indicates. While for Air India, they have seen a bit of a loss coming in terms of market share. The market share was at 27.3%. which was at an 11-month low. Let's not forget ATF prices, they have also remained in the range. So we'll be keeping an eye out on that for the aviation sector as a whole. And for Indigo, why are we seeing such a run-up? Because just yesterday we had seen Elara also give a double upgrade to a stock, buy rating from a previous sell rating, target price of 5,309 rupees per share from previous 3,847. So yes, couple of positives coming in for Interglobe Aviation, and that is why the stock is flying high in trade.
Okay, all right, Vinny, got that. Thank you very much for the details there. So Elara sounding an optimistic note on Interglobe. Deepan, so aviation, I mean, we know that that's where the spends are, right? Hospitality, aviation. But then the sector has its own woes to deal with. Sometimes there are engine issues. Sometimes there's a delay in delivery of aircraft, and there's regulation. Would you take a bet on an aviation stock like Interglobe at all?
Yeah, again, a disclosure, we are invested in Indigo. And I think it was very well covered by Vinny. Anything need to add over here is that the fresh capacity coming on stream over the next 3 years is phenomenal. And they are going global as well. So that could be even a kind of a boost for earnings. And with oil prices remaining steady, they'll be able to manage their margins far better. And if you compare, the ticket price also has improved year on year. So I think a lot of positive factors for aviation. Again, you have to compromise on the valuation for a company like Indigo, which has got such a fantastic market share and still such growth momentum. So I think that it's a great place to be in for the time being. Even if the market corrects a little bit, I think there is still a lot of growth in the aviation and the hotel industry, hospitality industry. And that's where investors should be slightly overweight.
Sagility? Is Sagility an IPO that you looked at? It listed about a month back. When it listed, there wasn't much fanfare. I think the IPO price was 30, 31, 32. It listed around those levels. But off late, over the last couple of days, there is far more exuberance related to Sagility.
Yeah, that's right, Rima. It was quite a low-profile IPO. And people that not really understood the business model, but now that it's gone public and a lot of more information is available, I think it's a great business. They're in this claims processing or managing of the claims for US companies. And the relationships which they have are quite phenomenal. They run back into several decades or so. And they're using a lot of the India-centric processing to manage their costs and be competitive. And overall, I think with the Trump administration coming in, there's going to be a lot more focused on reducing the cost when it comes to the healthcare industry in US And that's where outsourcing can play a major role. And I think Sagility certainly has very good services to offer as far as US healthcare outsourcing is concerned, not just for the insurance companies, but even hospitals and clinics and pharmacies as well. So very interesting company. I'm keeping it under watch. I wish I had bought it, but definitely keeping it under watch. And at correction, you to buy such concept stocks if they're available at reasonable valuations.
I think when IKS got listed, everyone was wondering, is there some similarity in the business model? There isn't. But I think it put the spotlight even on Sagility, because after that, you've started seeing that increased interest in Sagility.
Absolutely. So, technology in healthcare, specifically in the US market, that's what they're catering to. And it seems to be working well for them for now. All right, Deepan, we'll let you go on that note. Thank you very much for joining in. You have a great Christmas break, and see you again soon. Take a break on that note, come back on the other side, and then we'll have Amit Jeswani of Stallion Asset joining in.
Welcome back. It's time now to find out what Dealing Rooms is saying, and what better place to get it from other than NSE, and Nimesh is right there. Nimesh, it's tough, right? You almost feel, looking at the market action, that people have gone on holiday, the trading action would be muted. So I'm curious to hear what you have to say.
Well, Nima, it's really a struggle to find out what's really happening in the markets. No feedback, no dealers, no flows, absolutely nothing. It's pretty much quiet. Even the Nifty seems to be pretty much in that very narrow range, mid cap, small cap, everything seems to be in a very narrow range, and even the flows are quite muted as well. I guess from a sector point of view, some bit of traction is seen in the oil and gas stocks, and within that, it's basically the gas companies which have seen a bit of up moved today on the back of some reports of some relief there. So that's one sector which has done well, and some selective buying in the auto names as well. So these are the two sectors which stand out. But again, pretty much even in the broader market, it's been pretty quiet. From a technical point of view, the range to watch out is on the downside. 23,350 is a very crucial support on the Nifty, so that's to watch out for. And on the upside, 24,350 is the range which will now act as a very strong resistance. So Nifty, looks like it's going to be in a range of the 1,000 points at least in the next few days from here on. But as you rightly said, very muted flows. There is not much action as well. And as days go by towards the year end, you won't see even these kind of volumes in the last couple of days.
And stocks?
So, in terms of individual names, the first stock on my list is Ola Electric. While the stock has been consolidating in a narrow range, some flow seems to have emerged from larger HNIs, is what I understand. And also, all eyes will be on the announcement of those 4,000 store opening. That could be a near-term trigger for Ola Electric. So that's something to track there. The second stock is Vishal Mega Mart, a recent listing. After the listing, you've seen a bit of a consolidation in that stock as well, but the flows have resumed from larger FIs, is what I understand. And leading long-only fund seems to be an active buyer in Vishal Mega Mart. At these levels. So that's the second stock. The third name is Tata Motors. Up and buzzing in today's trade, up to 1% last I checked. The volumes have picked up as well. Couple of reasons why the stock is buzzing in trade. One, the selling pressure seems to be largely over from some larger FIs. And two, the street anticipates some clarity or some announcements from the company with regards to their EV penetration going forward. So that's something to watch out for in Tata Motors. And the last one is Tina Rubber. Again, a small stock. We don't talk too much about that name. Well, over the last couple of months, the stock has been in a range-bound trade, but I understand the company is likely to raise funds via QIP very soon. So that's a trigger in Tina Rubber.
Okay, all right. Thanks, Nimesh, very much for getting us whatever little inputs that you were able to gather. But otherwise, yeah, it's a fact the market is completely getting into holiday mood with the midweek holiday coming up tomorrow. Well, let's go across to our next guest. Amit Jeswani, founder and CIO at Stallion Asset, is joining in. Amit, I'm sure you're getting ready to wind down with a big party. You've done well. Your fund has done well this year. It's been all about growth. And though the Nifty has been, it's very quiet for the Nifty, just 10% growth, but individual stocks. And you've managed to pick many of them. So tell us, final thoughts before you close out for the year. What's new? We believe you've added Pratap Snacks. Any changes in the portfolio in the last 2-3 weeks?
Hi, Surbhi. Good afternoon, and thank you so much for having me on your show. Surbhi, it's been a rocking year, to be honest. Till Friday, we were making lifetime highs. Unfortunately, we've fallen a little, but it's okay. We are excited. It's not party time. It's time to think big. Donald Trump is coming on the 20th. That is going to give us a lot of opportunities. And individual stocks, we just play a lot of frameworks. So the stock that you mentioned, that's just because of change in management. We keep doing that all the time. That frameworks typically yields us multiple times higher than the benchmark kind of return. So these are just frameworks. Change in management is a framework, and we are taking only small bet, like 0.5%, 1%. In these frameworks, but the portfolio, we were on cash till last week. We've added some IPOs. So we got some opportunities there, and that is what we are doing. We're just trying to protect next year. We don't want to be super risk on. But we don't want to be risk off. We are trying to be fully invested all the time. We don't take market calls like what markets will go down, low. I don't care. I want to be with the best 25 companies who are executing very well, and they're growing at 2 times, 3 times the nominal GDP. And once you have that kind of team, over time you outperform the benchmark.
Amit, since you've had a knack of picking, real winners this year, I have to ask you about the IPOs as well. Tell us a bit, that was a teaser, and it's been such an IPO flurry, it's hard to remember who is listing, which issue is opening, because it's so hectic, right? Tell us the companies that you have chosen to back and why. At least 1 or 2 examples, some names.
So I'll give you an example that Kohinoor, I won't take the company's name, but Kohinoor is what I'm calling that company. There's a certification company which got listed. There are only 2 certification, like diamond certification companies, which got 1 diamond certification company that got listed. We bought first day, first show there. India, so lab grown is where 55-60% of their revenues are there. 65% market share globally. of lab-made diamond is by one, certification is by one company, and we got it at 35 times, very high ROCs of 50-60%. Duopoly, and they are market leaders in lab-made diamond, which is growing at 50-60%. And if you're getting lab-made diamond certification, see, these are national assets. You want to buy extreme high growth companies. Lab grown is growing at 50-60%. The company overall is growing at 30-odd%. So, and unlimited ROCs. Those are the kind of bets that we want to take. Very high ROC, very high growth, market leadership. There cannot be one more guy which can enter these kind of companies and these kind of business models. And today in the world, women, the total diamond polish market is 3.3 crore carats. Out of that, 60 lakh carats is lab-made diamond. 3.3 crore is the number of carats diamond that gets sold, and only 60 lakh is lab-made diamond. The prices of lab-made diamond is way lower. And here you get money on volumes. You get $20 for every certificate that you sign, basically. And the volumes, I think, will go up multiple times in lab-grown diamond, and we have got a good way to play it. So, of course, the stock has gone up today. I just saw it up, but these are good kind of bets that I think duopolistic market. There cannot be new guys. 30% growth. These are the places that we want to be, and we have 25 such names in our portfolio. So some of them will do well, some of them will lose money, but it's okay.
Well, International Gemological Institute, the IPO price was 417, and apart from high ROCE, even the margins are so high, 59% blended margins, even after they consolidate the Netherlands and the Belgium business. So IGI is one of your Kohinoors. Amit, any other recent purchases?
We bought one retailer which got listed. We are just
Vishal Mega Mart?
Yeah, that also we bought 70-odd% ROC, 26% growth in last 3-4 years. These are the kind of businesses we like. Where the first half growth for Vishal was very weak at 18%. So all these stocks are not recommendations. Me, my clients, my family members, we all have extreme high levels of vested interest. These are 0% recommendations. I'm just telling you what we might be doing, and we are buyer sellers very frequently. So do not do consult your advisors before you take. We are trading. We are like long-term traders, I should call. But yes, we have taken some small positions in Vishal Mega Mart as well. These are places that we have invested. We've tried a new kind of thing that we have going day one, first day, first show in IPOs. Let's see if we can get it right, or we can lose money also. Let's see.
But Demi, for Vishal Mega Mart, aren't you worried that it'll get, this entire consumption slowdown, fatigue, because it's catering to a price point which is about 200 rupees per apparel? Will this not hurt Vishal Mega Mart? As you said, H1 has been weak.
So if you grow more than 20%, then market treats you very differently. But if you grow less than 20%, market's treating you. This is what is happening in the consumer space. There are only few companies who are able to execute at more than 20%. And I don't see there any massive P/D rating happening. Vishal should do okay because they are not just apparels. Apparels is one part. That's around 40% of the business. And then 60% is FMCG and general merchandise. So that is, and they are 70% is in-house. They're like their own labels. And that is one of the best business matrices I've seen in retailers, which do 70% ROCs are very rare. And if they can grow, the main game is that if they can grow at 20% plus, see, we are trying. If they can grow at 20-25%, we'll be very happy. If they grow at 15% or 14%, then we may be sellers also. Who knows? So we will keep execution is the key thing for us. They have grown while the consumer slowdown was there. They have still grown at 18%, which is decent. Last year, they grew 26%. This year, they grew 18%. So it's okay. But if they can continue 20% plus, then we'll be very happy. And we would add more probably. I don't know. But if they don't, so we need growth. Wherever we see growth, that is where you'll find us. And if they don't grow, we'll keep cutting weights.
Got it. By the way, today is a great day for a lot of these recent listings. We're just discussing Vishal Mega Mart, that's up 2%. IGI, which is also a thesis that Amit likes, that's up 9%. There is, what else did I see? There's MobiKwik, there's Sai Life Sciences. New IPOs are really flying around today. And now let's come to the other side of it, Amit, because you mentioned, and I take that point, and I think viewers should keep that in mind, that you look at high momentum, you look at big growth, but you also look at very quick, very frequent portfolio changes. So whatever's not working is out, or wherever you think you've met your objectives, you're out. So where are you taking profits in the portfolio?
We have across, I don't want to name because we've been trading very large volumes now, Surabhi, so I don't want to take names, but here and there we are churning portfolios. We are, see, this 2025 will also give you opportunities. Markets are up near 10%, Nifty 50. I just heard we are up 6 times higher than that. So in every kind of market, you get opportunities. Next year is also going to be a year of opportunity. I find I'm fully optimistic about next year also. And keep your ears, keep trying new strategies. We have to keep our eyes, ears, everything open. Alphas are going to come. I don't find any reason why large alphas will not get made next year. Very good executors are.
You know, Amit, this is heartening to hear, because most pollsters and prediction experts on the street, managers, money managers, sell side people, most are predicting maybe range bound, maybe some correction, maybe slightly lackluster. But you're saying there'll still be plenty of opportunities at the stock level. So while you're not going to name stocks, tell us, what are you studying right now? Where could those hidden opportunities be? What kind of themes, what kind of areas, sectors, clutch of companies where the flavor could just take off?
Every morning I see what Donald Trump is doing. If you want to make alphas, it is going to be a Donald Trump year. This guy is, he makes decisions depending on what side of the bed he wakes up. So it's very difficult to predict what kind of decisions he's going to make. But if there are going to be tariffs, it's going to be trade wars, it's going to be a very different world 20, 30 days from today. And you have to be ready with all your opportunities. All we do from morning to evening at Stallion is keep thinking that if Trump does this, how do we position? We're just learning, because the industries which will get impacted, we don't typically own those kind of industries, or we don't even track those kind of industries so well. But there's a change which will happen. And when there's a large change, your profit pools can change. Like, think about it. Today in the solar cell market, okay? These solar cell guys, I'm not taking the leader, which all these guys, they buy cells from China at 7 cents and they are selling at 17 cents. There is a 60% duty on China. Even the US guys know that these guys are buying at 7 cents and selling at 17 cents. Same everything to the US guys, yet they're ready to lose money. I'm just telling you, this is not about trade wars. No, economies are not, like, no one is thinking economics here. It's about who will be the superpower. Will it be US or will it be China? So there is no economics, there's no thinking mind. It's just about superpower battles. And I don't do macro at all. But next year we might try some macro also. I don't know if we do it or no, but we are trying. We are working hard on it.
Okay, Amit, thank you very much. Have a very Merry Christmas. And if we don't speak, a very Happy New Year too. And may 2025 bring you as much luck as 2024 did. Get into a break. On the other side, a few BTST calls from our technical experts. Stay with us.
Welcome back. Still very quiet on the index. There's not much moving. And even the Midcap index actually is completely flattened out. So, Mitesh, what's the final advice? I mean, this morning started with you saying that if there is a bounce, you'll short short any kind of a rally, and that kind of worked. Any further stocks now? Any final advice?
See, to me, this market still looks like, it may not break down big time, but I think, still range. So we were at the upper end of the range. We've kind of come up from there to the middle of the range. We might go down further a bit, head towards, 23,600, 550 zones. So that is the kind of index outlook. With that, I have a STVT on Power Grid with a stop at 312.5 for targets of 306, 305 kind of level on the downside. And the other one is STVT on HCL Tech, and after a long time, a technology name on the radar. I think the first signs of pullback are visible over here. So keep a very tight stop at 1910, look for targets of 1875.
Okay, all right, got it. Thanks for that, Mitesh. You have a good Christmas break, and see you again with the market when we get back. Right now, let's move on and tell you more about that exclusive story that our colleague Ashwin from Money Control picked up, and that's causing quite a flutter in a whole bunch of Tata Group stocks. And the story is that Tata Capital, the flagship financial services arm of the Tata Group, has initiated work on a big bang listing, and it could take place as early as the new year itself, early in the new year. Let's go across to Ashwin for more details. Ashwin, what are you picking up?
What we are given to understand from our sources is that Tata Capital, the financial services flagship of the Tata Group and the subsidiary of holding company Tata Sons, has in fact initiated work and the process for a big bang mega initial public offer or IPO in 2025. Sources are telling us that this issue could be anywhere in the region of 15,000 crore plus rupees, and these sources are also telling us that it could likely be a combination of both a primary issue of shares and a secondary component. Now, Kotak Mahindra Capital, the investment bank, and law firm Cyril Amarchand Mangaldas, these are the two advisors that our sources are telling us have been roped in as of now. Other bankers and law firms may also be taken on board at a later stage. Now, if you look at Tata Capital, it had assets under management of around 1,58,000 crores as of March this year, and Tata Sons holds around 92 odd% in Tata Capital. The remaining stake is held by a few other Tata Group companies and also the trust. Now, the reason why the Tatas are going in for this IPO is because under RBI norms, all NBFCs that are classified in the list of upper layer NBFCs, they have to mandatorily list by September 2025. So that is the regulatory compliance, and hence this process has begun. We are yet to hear from Tata Sons and Tata Capital. Let's keep a watch out for this big deal in the new calendar year.
Thank you very much for that. Even if you remember Bajaj Housing Finance, which listed earlier this year, one of the reason for that was the same, because it's classified as an upper level NBFC, upper layer NBFC, and it has to be listed.
Absolutely. So mandatory regulatory reasoning. But I mean, it got the market excited nonetheless, which is what we're seeing with a lot of Tata Group stocks as well today. Well, Jay Bala of Cash the Chaos is our next guest on the show. Jay, thank you for joining in. Before we talk markets and indices, since this is an interesting story in the market today, this possible new IPO coming in from the Tata Group, let me talk about current stocks, whether it's a Tata Motors, Tata Investments, anything where you're seeing either a trading or an investment opportunity, anything where some action can be taken on the Tata names.
Yeah, now that you touched upon the topic, Surbi, I have a pick from Tata Group case for today. Actually, that stock is Tata Chemicals. It's actually looking quite interesting, but the overall environment is negative. So my objective is slightly lower. Normally, the target would have been about the fresh 52-week highs, all-time highs. I have a long call with a stop loss of about 1,020 with an objective of 1164. That's the most interesting stock within the Tata Group space. And on a longer term basis, I'm waiting for Tata Technologies to fall a little more further and bottom out for the medium to long term. So these are the two names I'm watching. Tata Chemicals, more immediate. Tata Technologies, little more to fall. and then pick up at the lows. So, waiting for reversal to come through, not yet. But TCS is actually the weakest within the space. Surprisingly, the IT index being the strongest. Within that, TCS is the weakest within that sector.
Jay, you've been calling for the markets to head significantly lower, but so far at least we've managed to arrest the downfall with about a 10% cut. Have you been surprised with the way the markets have reacted? What would you attribute this sort of resilience to? And again, do you maintain your call that we head lower, and what would the trigger be?
Yes, Reema, very much maintaining that call. The market is just meandering in a bullish fashion, to very short-term bullish fashion. I expect the Nifty to maximum that 24,800 is a very big stretch. I anticipate it to during the festive season to bounce up somewhere close to about 24,100, but I wouldn't bet too much on it because the higher time frame objective is the June 4th low of 21,300 and change, 21,280, whatever that number is on June 4th low. The markets are hitting there. It's a very short-term bounce. As we are seeing today, the banking index is exhibiting weakness. SBI, the pivotal which is within it, is showing further weakness. It shouldn't have printed 810. It has done that. It can see a short-term bounce to about 840, but the banking index is, I think, about to take lead and lead the markets lower. The markets are weak, and I have a rough objective. As with anything in the markets, nothing is cast in stone. I have an objective of 23rd January to February 18th. These are the 2 dates I have for the markets to bottom. If the market, the cap is a rough estimate, not a figure that's cast in stone.
No, so Jay, just to get the view again, near-term target on the Nifty, what would that be?
Yeah, very rough. I won't be whole. I've been trying to play long on this, but if the markets gets there, I'll short that. The objective is 24,100. So that's the ideal area to get reshort in the market.
And then when you initiate that short at 24,100, then what is the downside expectation you have?
By Jan 23rd, I would anticipate the market to touch the June 4th low of 21,280. And the intermediate levels are about the November low is 23,264. And beyond that, it's 22,600. And then directly to the June 4th low of 21,280.
Okay, so that's still on the table. You've been calling for that for a while, that we will retest that low that we made on the day that we got our general election results. So you're saying maybe around the 23rd of January, that could still happen. Interesting call.
Jay, what's gotten everyone worried here has been the rise in the dollar index, and it's staying at 108. Even the pullbacks have been fairly minor. What's the call on dollar index?
I'm still holding the objective of 109. 108.8 was the high the dollar index saw a couple of days ago. I'm anticipating it to exceed that. But once that's exceeded, there is a possibility of a cool off for the dollar index to somewhere about 105.5. So in the very short term, there's one more high due, about 108.85, and 109.5 is the rough estimate. But the structure is the market should exceed 108.85 and then pull back to 105.5. On the longer term, this is probably the beginning stages of a move towards 123 to 124 by mid-2026. That also, I've been reiterating for quite some time. So it's not something new, but, short-term up-down movements are pending. But we need to see this reiteration once the presidential inauguration happens in the first week of January.
It's going to be high drama in January, that's for sure. And then ultimately we head into our budget, so it's going to be action-packed. Stay on, Jay. I have more questions in just a bit, but right now we do have to take a break. And as we take this break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the CNBC-TV18 app from the Apple Store or from Google Play. Just 7 minutes to go before the day closes out. Let's get you a fundamental call on the market. We caught up with Samir Arora of Helios Capital earlier in the day, and he's very optimistic on the new year that's coming in. Take a look at his top calls, some thematic ideas, and what he feels the market may do in the new year.
I have seen widely out of line markets. For example, in 2004, 5, 6, and 7 calendar years, the market was up 40% per annum. If you look at the 500 index, it was up some 39 point some percent per annum. We have seen periods like 1999, when the market went up some 85% and the NAV of my fund, Alliance Equity Fund, now called Birla Sun Life Equity Fund, in that one calendar year was up 280%. Those are wild bull runs. This is a measured bull run according to me. So our logic is that you will have 2 or 3 main chunks, which mostly the market has converged to financial sector, financial services, private sector banks, and some form of IT, which for 2 years we were bearish up to June of 24, and now we think IT is a good sector. We will not buy the EMS companies because our logic is that we have a benchmark, and those benchmarks of EMS companies trade at 8 multiple and 10 multiple, and in India you can make it 20 because everything is double, but you don't make it 150 multiple. After the Trump victory, bought all the 4 asset classes personally, because in my fund I only broadly do India, and then we have a global fund, but that is India, US, China, and gold. Everything is a buy. It has been very measured, and the reason why it is measured is that there is supply. Now, people take it as a negative that there has been so much supply, but simultaneously there has been so much demand in the sense of flows from domestic guys. But whatever be the reason, the supply has made the overall market in check.
Okay, not convinced about EMS companies which have had a splendid run because of the valuations. We're in conversation with Jay Bala. Jay, have you had a look at the charts of companies like a Dixon, Amber Enterprises, Akane's Technology? And what have you made of it?
Yeah, see, Dixon, I've had a look at it and I'm watching quite closely. I anticipated it to top around 16,600 to 17,000. It's gone to 19,000 and it's come back to 17,000 again. So now if this pullback were to stall at about 18,500, there's a good probability that Dixon Technologies has clocked a significant top. But I will wait for the stock to break down below somewhere about 15,300. And then there'll be a sharp fall, likely somewhere about 11,000 to 9,000 for Dixon Technologies. Amber Enterprises, yeah, I've had a look. It's still looking quite bullish for probably one more sequence of higher high to come through, one pullback and one more high somewhere about 7,900 to 8,250. So yeah, these are all in the late stages of the rally. But so be quite cautious unless you're an extreme short-term trader. I don't think there are investment opportunities in these names at present levels.
Okay, all right. Got that. By the way, that's some, I think, positive news coming in from, the US for Biocon. Earlier, Biocon was reacting quite well to an approval coming in from the EU for one of their diabetes drugs. And now this is a VAI status for their API facility in Bengaluru. And VAI is great because it's voluntary action. It's not an official action that's indicated or initiated by the US FDA, which is far more severe. So VAI is good. In addition, the positive news from the EU has meant, pretty good move on the stock today. Jay, finally, since you're saying that there could be some, near-term upsides, and you are expecting on the Nifty that move to 24,100, what would be some quick, smart trades to look at? Anything that you would advise?
Yeah. Besides Tata Chemicals, I have another pick that's on capital goods name. It's called Crompton Greaves Consumer. It's a very little better than buy today, sell tomorrow. Long with a stop loss at about 380 with an objective of 420. So yeah, all your longs have to be quite small, and you need to take profits quickly. Don't linger longer than required. As soon as you see some green, take some money off the table.
To the global picture, What is the chart of the Dow Jones telling you? Because that's been the standout market of 2024. It surpassed all expectation, all odds, no recession, and it's been the best performer.
Yeah, interesting that you asked about Dow Jones, Rima. See, Dow Jones had 11 consecutive sessions between December 5th and December 19th, where the close was lower than the open. So this occurrence is happening after 50 years. It's the last time it occurred was in 1974. So this is a very, very rare occurrence. The market is telling you a very important message that we probably have seen a top for the Dow. And as the new year begins, I'm anticipating a decline to take hold. So as the festive season comes to an end, I anticipate the S&P futures to clock about 6,100 and the NASDAQ futures to clock about 21,000 and change. So, and once that's done, the counter-trend bounce is done, and we are likely to see a very sharp decline take hold. Bitcoin, which is a measure of risk on or risk off for me. I pointed out last time there's a possibility of a terminal top. Once again, watch that too. If we do resist 102 and those levels and then break down, we have a very, very big top for Bitcoin. It's likely to have. This is what I said last week too. So watch out for risk-off, risk-on signs from Bitcoin.
I think you have to watch for January very, very carefully because you're talking about maybe a big downside in equities, the Bitcoin topping and even halving. So yeah, let's see. Anything's possible as the new year begins. Jay, thank you very much for joining in case we don't catch up before January. Wish you a fantastic end of the year and a great 2025 as well. Well, let's quickly recap what's been such a quiet day. Look at the Nifty. It's down quite a bit from the peak, as that graphic is telling us, but it's hardly changed. I mean, 10 points down, that's what we've got. The Midcap index is also absolutely flat. Bank Nifty range-bound. In terms of the weak hands today, metal stocks cooled off. JSW Steel, Hindalco, Tata Steel, all those stocks are down. There's some profit-taking and weakness in financials. SBI Life, IndusInd Bank. And IT stocks didn't quite come to the Christmas party. Look at Infosys, Wipro. Most of those names have been sulking today on the downside. On the upside, the Tata Group was shining. Tata Motors 2%. If you go beyond the Nifty, look at stocks like Tata Chemicals and Investment. They've done even better. Tata Investments almost 6% higher. The Nifty gainers included some auto names like Eicher Motors, some consumer names like Nestle, ITC, and Britannia. But I think the more eye-catching movers were beyond the Nifty, Rima, today, and plenty of them.
Plenty of them. And so far, at least, Santa hasn't visited the large caps because month to date, in the month of December, the Nifty is down 1.7%. Though there is green, a 1% rally on the Midcap index. Quick word on the Midcap movers. MobiKwik, top honors. IGI, 10% up. It moved up in the last 1 hour of trade. Greaves Cotton, there was news about its EV subsidiary going in for a 1,000 crore IPO, 7.5%. Sagility, RBL Bank, Hindustan Copper, Vishal Mega Mart. Many of the gas names, IGL, GAIL, also on the winners list. On the way down, HCC down for the second day in a row. Many metals weak in trade. Vedanta, SAIL. Vedanta also went ex-dividend, but SAIL, Nalco, NMDC under pressure, and Swiggy gave up some of its recent gains. Well, with that, it's a wrap on Christmas Eve's market trading. But don't go anywhere because on the other side is Markets Forward.